4:08, and we start off with the show with a conversation with the CEO and founder of Khotla Agency. He's a financial advisor, banker, as well as an insurance expert. Khotla, good afternoon to you. Welcome to the show.
Thank you for having me, Kathy.
Let's get straight to it. We're talking loans today, and we are going to actually be covering personal loans. And no, we're dealing with individuals, yes, personal loans. We will at some point then get to talk about corporations and organizations. So, how a business would go ahead and apply yes, for a loan. So, let's just start off with the basics, the qualifications. In order for me to qualify for a loan, what do I need to do? Who do I need to be?
So this one is a bit segmented. Unfortunately, you have to be employed.
Okay.
That is because of the risk that actually comes with the issuing out of facilities. So banks or financial institutions need to be safe or need to have some sort of guarantee that they will be paid back. That is why they only issue out loans to somebody who's employed. One week regarding individuals.
Okay. So even if we'll talk about businesses another time. So in terms of knowing how much you qualify for, what are the things that determine that?
So there's something called a customer rate to interest. So what we look at is your basic salary.
Yeah.
Basic salary and something also called fixed income or fixed if there's a fixed salary or an extra salary that comes through on a monthly basis, just as the salary does. Let's take an example of somebody who earns, say, for example, 5,000. You'll find that there's a way that they actually differentiate. Normally, it's 40%, but there are certain institutions whereby you maybe go to maybe 45% or 50%. That is negotiable. So we look at 40% of your basic salary. Then that is the maximum that you can pay back to the bank. So we cannot go above that particular 40%. Now, from that, there'll also be a term that will be attached to it. There's 12 months, 6 months, 24 months, normally up to a maximum of 6 years. Most financial institutions would go up to 6 years.
Okay. So the most normally you can get for a loan is 6 years. This is a personal loan.
A personal loan.
So I would assume that mortgages fall in a different category.
Yes, they fall in a different, they actually looked at it a different way.
Okay. So we'll touch on mortgages at some point as well.
We'll get
so
into that.
Let's talk about, you touched a little bit on the qualification. Now let's talk about the rates for loans. Because a lot of the time you see things written prime plus something, that kind of thing. I think a lot of the time people don't even understand what that is.
Yes. There's something called a prime lending rate.
Okay.
That one is normally given out by the Bank of Botswana.
Okay.
At current or at present, it's at 6.5. So when a loan is issued out, say for example an organization, they would give out a loan at a certain prime rate plus an interest rate on top of that. For example, you might have an institution or an organization. Unfortunately, I cannot give out any names.
Okay.
Let's say there's a particular corporation. Their rate would be prime plus 2. That means if it's prime plus 2, it's 6.5, which is the prime, plus 2%. That means the loans that will be given out will be 8.5%. That is how the rate goes. That is the prime lending rate plus a certain percentage on